Jim Rogers, thank you for coming on the Big Trade Series. It's been about a year since you were last on, and thank you for coming on again to discuss with me. As you know, we wanted to try to meet up with each other, but unfortunately this time we're not able to do so because I believe you're heading to Colombia.
Yes, Peter, I'm delighted to be here. It's good to see you again, and I am about to head off to Medellin. Medellin, which used to be the center of drug strife and civil war and horrible things, is now one of the most exciting cities in the world.
Are you going there for conferences or looking at some interesting opportunities?
Well, I'm going there to speak, but I'm speaking for a group, which is an extremely interesting opportunity as far as I'm concerned.
Okay, very interesting. So, Jim, when I met up with you about a year ago, I was probably about maybe 1 or 2 years in my US dollar long position. And I know that as of maybe the last at least year or so, I've heard that you've also have been allocating a lot of your capital into the US dollar. One of the reasons why I liked it at that time was I found it to be like a synthetic short, and it allowed me, because I started my hedge fund about maybe 1 or 2 years ago, and it allowed me to get exposure into that short position on US equities and allowed me to not have to try to take long positions on US equities and obtain some kind of capital gain during that whole process. And obviously, as you said, it's like a way that people might perceive as a safe haven, even though it's not. But most of this year, actually, the US dollar hasn't been looking so spectacular, and I'm sure that has to do with the rate in which interest rates are rising. How do you feel about that? And I know probably you're going to be thinking about this more from a long-term perspective, but I'd love to hear more about your thesis on that as well, and how you've been able to address the position and how it's been going on for, say, since December of this year.
The U.S. dollar has done well against some currencies.
Right.
Against others it hasn't, as you rightfully point out. The currencies were beaten down so much, like the yen and the euro, et cetera, that they've been rallying.
Mm-hmm.
I still own U.S. dollars. I own the Chinese currency.
Mm-hmm.
As well. I own a smattering of other currencies, but I still own the dollar, on the theory, Peter, that there's going to be more turmoil in the world, and many people are going to seek a safe haven. Mm-hmm. The U.S. dollar is a terribly flawed currency. It is not a safe haven, but it is perceived that way. And when the turmoil gets worse, many people will flee to the U.S. dollar. I hope that I'm smart enough that when it gets overpriced and maybe even turns into a bubble, I hope I'm smart enough to sell it.
Do you find yourself, I don't know the weighting that you have in your positions, but do you find yourself sometimes thinking about like the relationship or the correlations or discorrelations of your US dollar position and your other long currency holdings, such as like the renminbi? Like how is there a world in which both are appreciating?
Well, the renminbi has been the strongest currency in the world over the past 10 or 11 years.
Right.
It is weakened against the U.S. dollar,
mm-hmm.
Obviously, but it's still very strong against nearly all currencies in the world. It is now, the U.S. dollar in recent months has been strong. Well, I'm not even sure that's true as of this week, but certainly the U.S. dollar was stronger against the renminbi for a while. But no, I don't pay too much attention, Peter. I don't have any clients. You have clients you have to worry about, you have to report.
Yeah.
I usually don't even know, much less care how I'm doing unless something goes really wrong.
What I've also been thinking about, Jim, is because of this significant appreciation of the US dollar, I've actually been looking at some other currencies that seem to me to be a little bit overextended in terms of their decline. And over the last several months, I've been seeing some of these currencies do quite well, like the Kiwi dollar, particularly as one of them. I don't know if you have any thoughts on, countries in which you're actually hearing about the rate of interest rate hikes being beneficial to the currency to some extent.
Well, interest rate hikes often have been beneficial, at least in the short term, because mm-hmm. they I can earn more money. The fundamentals, though, in the end, went out.
Mm-hmm.
You can raise interest rates. Sometimes you have to raise interest rates 5 or 10 times
Right.
to really make any kind of significant difference. I bought rubles recently. You were beating down currencies. What I actually did was I bought short-term Russian government bonds in rubles.
Right.
At a high interest rate, and if the ruble goes up, I'll get a double play. If the ruble goes down, of course, I won't get a double play. But that's about the only thing that I have bought recently along the lines of what you're discussing.
You know what was interesting? I remember distinctly on the day that I was with you, and we were talking about Russia. And actually, you had kind of just walked away from the conversation because you had to get to your trading desk. And I think you were indicating at that moment that you were really interested in at least something related to Russia. I didn't know that it ended up being the kind of position that you took, but I do remember that happening distinctly.
Well, that's with the Russian ruble government bonds that I bought, and I bought 2-year government bonds.
Right.
That was only a couple of weeks ago.
Okay.
So what it may have been back then, the company in which I'm a director.
Yes, the agriculture.
Yes, the fertilizer company. I think it was probably that I bought more shares. It's called Fox Agro. I think it's listed in London. And by the way, it's astonishing because Fox Agro is near its all-time high.
Yes.
Despite all the stuff you hear about Russia, etc. All-time high in U.S. dollars. But I think that's probably what you're referring to.
Okay, so Jim, that's going to make a great segue to all this discussion about agriculture. You've been quoted in discussing about how China will basically do everything to support that industry, and how the government will provide a lot of incentives for that. I want to propose to you, Jim, because we talked about this once or twice before. As you know, I'm a big advocate of the Vietnam capital markets, and we're actually looking at some projects related to the agricultural space here in Vietnam. You actually, in the last conversation that we had discussed about, how people here in Vietnam should take advantage of that agricultural space. And I've actually taken the liberties to look into that. And it's a fantastic market because somewhere like Singapore, where you reside in, is primarily importing most of its agricultural foods from places like China and Malaysia. But Singapore actually has set up a food processing zone in China, but it's actually been very inefficient, and it's actually been considered somewhat of a failure due to all the delays that project has had. I'm here to make a case to you, Jim, that in Vietnam and certain areas in Vietnam are very attractive for agriculture. The market's a little bit more inefficient. The land lease rights is pretty much the same like in China, but it's arguably cheaper. Some of the environmental factors, geographical factors allow for year-round growing and yields of agricultural products. And Singapore actually has a strategic partnership with Vietnam as well. I think that's a fantastic space for you to look into. And it's not like Vietnam hasn't been exporting agricultural products to begin with for the last several years anyways.
Well, Vietnam, agriculture in many places in the world has a great future, and Vietnam is clearly one of them. There's no question about that.
Yeah.
I mentioned China before because the Chinese government is giving huge incentives to develop the countryside and agriculture, which has been a disaster. Mao Zedong ruined China in many ways, including agriculture. Well, they've got a problem, and they know it. But agriculture worldwide has a great future, and certainly including Vietnam.
Yes. All the incentives that you talk about, I also see a lot of similarity and patterns like that also in places like Vietnam as well. But I also feel as if because it's a smaller market, significantly smaller market than China, that the FDI, a foreign direct investment into this industry, is actually less, there's actually less of it. And therefore, I believe that there's a lot of opportunities and inefficiencies that exist, in addition to all the, potential margins that you could capture from labor costs, land costs, and just capitalizing on the inefficiencies and the potential restructuring of the industry as well.
Well, for many historic reasons, there are certainly many kinds of opportunities, especially in agriculture in Vietnam. There's no question about that.
Yes, yes. All right, so we just discussed about agriculture so far. We've talked about U.S. dollar because you mentioned the agriculture company you're invested in. I wanted to come back to some macro things such as the trend of debt, right? Over the last several years, there's probably no greater trend, no consistent trend compared to this whole great debt. As you know, the world's now about $200 trillion in debt. Places that you like a lot as well, like China, has quadrupled in debt since the financial crisis. First off, like, what do you think about that? I know you discussed about that a lot. And what are ways that investors can look into this trend? Because I think that that's one of the only certainties that we have left.
Well, for many historic reasons, China has not had much debt until the last decade. In 2008, when the world collapsed, China had a lot of money saved for a rainy day. It started raining, and they started spending them and helping out the world. Now, China has increased debt itself. They have debt, which is unusual, at least on a historic basis. Mm-hmm. And next time around, it's going to cause problems. It's going to surprise a lot of people, including the Chinese. You will have, at least the government says they're going to let people go bankrupt, and I hope they mean it. Mm-hmm. But China's not as bad as the U.S. or Italy or Portugal or the U.K. or some other countries. But you're exactly right, though. The world is going to be, the next time we have economic problems, they're going to be worse because the debt everywhere is much, much higher than it was even in 2008.
What are the best ways you think then to, like, if we recognize this as a trend, does any kind of like position or investment or short come to mind when you think about that thesis?
Well, learn how to sell short is the first step. And, learn how to short bonds, certainly junk bonds. Short junk bonds at the moment. I am not short bonds otherwise. Mm-hmm. There would be a time when I hope I'm smart enough to short bonds too again. But at the moment, I'm just short junk bonds. There's going to be great opportunity, but there's going to be great opportunities shorting stocks as well in the foreseeable future.
Do you see any merit in some companies, surprisingly, post-2007, have actually worked towards deleveraging? I'm not saying all of them are like ideal situations like Argentina, but there are countries like Romania, Egypt, Israel, Saudi Arabia that actually have been deleveraging to some extent. Is there any merit in looking at those kind of countries that might be doing some deleveraging?
I'm sorry, you said Saudi Arabia? Saudi Arabia's debt is going through the roof.
It is, but post-2007, in terms of percentage points, it's actually declined slightly.
Okay.
Yeah.
Maybe it's an opportunity. For me, it's not. Sure. Yes, anybody who is going to go into and come out of this next turmoil,
right,
less leverage, is going to be in a better position. It will come out the other side much better off. Mm-hmm. But most people are going into the problem with higher debt, and many of them will come out the other side with even more debt. And you mentioned Argentina. Yeah. Well, long as Argentina's got less debt, because nobody will lend them money.
Exactly. Some of them are.
So I'm not sure I consider that a positive in the case of Argentina, although the new guy does seem to be much better and know what's going on and to be doing things right.
Right. Yeah, it's just unfortunately, like, we have to be pragmatic to what's going on in the world. It's not going to be like a country with very, very little debt. You actually have to just look at countries maybe with declining debt to some extent in terms of percentage points relative to, say a particular starting point like 2007, or in terms of currencies. As you know, not all of them, or actually very few of them, are even ideal to begin with, and you're kind of just dealing with where they're at in terms of their business cycle. So it's just kind of like the world we live in, and I'm trying to just think of some ideas and outside the box perspectives that might allow, say, for example, the audience to think about in terms of these aspects?
Well, when there's a problem in markets, when there's a bear market, for instance, what make a lot of money coming out the other side is to own the companies and the stocks that came through the period unimpaired. The companies whose earnings keep going up through the hard times, those are the companies which lead the recovery on the other side. So whoever it is, whatever it is, if you can find people that will pass the test, is one way to look at it, the test of hard times, you find those entities, and those are the ones that lead coming out the other side.
Right. So, Jim, I've heard you discuss a lot about shorting some of those stocks that have done very well, particularly in the U.S. equity markets. It seems to me like, correct me if I'm wrong, like, is it fair to say that that's kind of like one of your strategies to identify maybe the peak of a market? Because you've discussed about previously how in markets, part of the phase of a particular index is that you'll only have a few remaining stocks that are basically supporting the rest of the market due to its, I guess, market weight. And ultimately, those would also start to decline, and therefore that could lead to some kind of potential bear markets to some extent. Is that kind of your thinking towards that approach? I'm just grabbing different sound bites from everything I'm hearing you're discussing about all over the place and trying to understand what's being said there.
Well, often you find in markets that the marginal companies start going down, the stocks start going down first, and in the end, it's really only a few generals that are leading the charge, and most stocks are going down. But since the generals are big and very publicly obvious, they hold the market up, and the people think everything is okay. Well, the breadth, the advanced decline line, is deteriorating.
Right.
I've seen it happen many times in the past. It has been happening in the U.S. in the last year or two. Last year, only 1/3 of stocks on the New York Stock Exchange were up. Twice as many stocks were down as up on the New York Stock Exchange, and yet people think the stock market in New York did okay last year. It didn't, unless you happen to own the few stocks which were holding up the averages. And normally, or often, when that kind of situation develops, eventually those generals go too, and that is the final stage. That's when you have the collapse, the capitulation, the panic. It doesn't always work, obviously, but that has often been the case.
So I guess that's the perspective that you're trying to take, right? In which is why you're shorting some of these bigger companies.
Yes, those companies never go down, and normally, as I said, historically, in the end, those are the ones that lead the final collapse down. It's happened in my stock market history in the last 4 years, and I'm sure other people have experienced the same thing. And certainly, if you go back and read your history, you will see it's often the case. In the early 1970s, for instance, in New York, there was something called the Nifty 50. They had 50 stocks that, quote, never went down, because J.P. Morgan would buy them every day, and all those kind of institutions would buy them every day on the theory that their earnings would never go down. They would always grow. Well, those stocks held up until the very end, but in the very end, boy, did they go down. They totally collapsed.
But you also discussed just earlier about those companies that are going to do very, like, say, the ones that did well in the previous cycle could be one of the ultimate benefactors on, a resurgence back into equities. Is that where you're looking at the secular trend of some of these companies? Hypothetically, let's say there was this agriculture company that you really like, let's say in Russia, for example, and then, Russian equities start to decline quite precipitously. Are you trying to say that because there's a secular trend for the underlying fundamentals of that business, that it would still be interesting to think about how you could reposition yourself on some potential, surge in the stock market?
Well, normally, if you can find a company that's going to go through a hard time and come out the other side unimpaired, yes, there's obviously a secular trend for that industry, or they would have troubles like everybody else. So yes, it's part. The secular trend has to be in your favor, or it's unlikely that the company will come through untouched.
Do you think we as humans are smart enough to identify what a secular trend is at the moment? Like you could argue, like, information technology stocks, say in the 2000s, were a secular trend. In fact, they still are, right? But a lot of them experienced a lot of declines. Like, are we trying to like rationalize these positions or try to explain them based on past performance or what they could look like in the future?
Well, clearly you have to have the secular trend in your favor, but then there's a lot more. There's management, there's competition, there's et cetera, et cetera, et cetera. There's debt, lack of debt, manufacturing efficiencies. So
right.
The secular trend needs to be in your favor, but that does not mean people cannot fail just because they're in the right business at the right time. Many dot-com companies failed. I mean, dot-com did not go away. The internet has not gone away. In fact, if anything, it's extraordinary how much the internet has grown in the past 15 or 20 years. But a lot of those dot-com companies that were selling at absurd prices have disappeared.
Right. So, Jim, you've constructed quite a few indexes in your lifetime. I'm actually working on the construction of an index for Vietnam. I just signed an agreement with Standard & Poor's to be our index calculator. It's for the market here in Vietnam. The reason why I created it is that obviously we want to try to create something for foreign investors that would allow them the ability to invest in markets where there's a lot of like capital controls and foreign ownership restrictions. So I actually made like an equal weight index, and that one of the reasons is like, unlike in China, they have like Class A, Class B shares. In Vietnam, they just have a percentage limit in how much foreigners can own of a particular stock. So therefore, by equal weighting it takes away less emphasis on too much market weight on a particular equity, and it gives you kind of like, a benchmark for you to get some exposure into these markets. Another reason why I like it is that it helps address some of the issues in terms of the float that state-owned enterprises have, typically in countries like China and Vietnam, is that they're going to want to float on the market companies that, state-owned enterprises that might not be so spectacular. So whereas the good companies, you're going to have less float of into the stock market. First off, I'd love to hear your thoughts on that. But secondly is when constructing an index like you've done for some of these ones, and when discussing about like how you're trying to address these stocks that are doing well in markets that are in bull market phases, what do you think one needs to consider when constructing some kind of index?
Well, it sounds to me like you've taken into consideration most of the things that one needs to be aware of for a good index, especially in a place that's somewhat limited like Vietnam. I mean, Vietnam doesn't have 2,000 high-quality big stocks.
Yes.
Meaning the U.S. does, for instance, or high enough quality. So, but for somebody like Vietnam, you've got to be selected to do the index right. It sounds to me like you're doing it. I mean, I'm not familiar enough with Vietnam to be too specific, but your description sounds great.
Yeah, I think that these are some of the factors. I think that the manner in which we construct the index is applicable to many of these frontier and emerging markets. Issues are like foreign ownership restrictions, the magnitude of state-owned enterprises and their influence on the market capitalization weight of the actual index itself, the liquidity issues in having, there's only a limited amount of companies that truly are liquid in some of these markets. And I think by having the equal weighting, it's a simple but relatively elegant solution to that. So I'd love to discuss with you more about that sometime soon. The index is going to go live in mid-April, which is actually a very short period of time from now. But I know that you've created a lot of indexes. You've created one that's focused on global resources. Could you describe to me about like how that is calculated to some extent?
Well, what it depends on the perceived needs of the market or the real needs of the market.
Yeah.
If in that particular case, if people wanted to invest in natural resources, but they did not want to invest in commodities themselves, you have the key is to find liquid, recognized names that are tradable, so people can hedge.
Yes.
People need to be able to hedge positions if they want to, and you need to have names that are internationally recognized and big enough to trade.
Mm-hmm. Mm-hmm. And how does your global resource index reflect all of these different pots, like agriculture and everything that you're trying to address? Does it do that, or
Yes, no. We take the various natural resource sectors, whether it's agriculture or mining or energy, whatever it happens to be,
mm-hmm.
and the major companies with a major trading volume and turn it into an index.
I'd love to. I'm in the process of trying to work on launching also an organic related index. I feel as if that's one of the secular trends within the agricultural space that could be really interesting. And Jim, believe it or not, nothing like that exists so far that I know of.
Well, how many organic, are there enough organic, and I don't know, asking, are there enough organic companies to have a viable index?
Probably pretty big. Basically, for example, depending on the criteria that you set. So, for example, where within the value chain these organic-based companies would be involved with, that would be one factor. And thinking about the magnitude of exposure, like, is Whole Foods an organic company to some extent? And we'd have to try to identify that. But if you take a look at Whole Foods and its total market cap, that could be maybe one of the bigger companies potentially. We're still working on some of the criteria, but ultimately getting some kind of reflection on that would also be very compelling. Right here, as I told you, in Vietnam, I'm starting to eat a lot of organic foods, and basically it's so different from the kind of inorganic processed food that we're getting around the world, actually.
Well, there's no question that organic food is growing and growing rapidly worldwide. Part of it, there's so many polluted countries and soil and water and air. So, organic, if you can find competitive and efficient producers, they probably have a very good future.
Yeah.
Until the world is cleaned up, but it's going to take a long time to clean up the world.
Yeah. And for anyone that's kind of like lazy and just wants to sit on their desk and trade or make investments, I think that could be a nice product and tool for people to get some exposure to. So that's just my rationale. So as we talked about Russia earlier, and you're talking about the continuance, interdependence or codependence of China and Russia. Like, how do you see the relationship evolving, and what are the significant ramifications that we could expect out of this, and where are the opportunities there?
Well, they happen to be geographically next to each other, and that doesn't necessarily matter, because, for instance, there have been times in history when they have been totally at odds and not cooperated at all.
Right.
Just out of a period like that. But now, for whatever reason, well, not whatever reason, the Americans are forcing the Chinese and the Russians closer together. So there are many, many huge trading opportunities. The Russians have vast natural resources. The Chinese have vast population. So there's a huge synergy between the two, and that's coming closer and closer together. The Russians and the Chinese are going to trade more. The Chinese have a lot of capital. The Russians have capital too, but they can help fund each other, given that the West is pulling away from Russia. So there are many, many synergies. And I hate saying it, there are many synergies being forced upon them because of the absurdity of the U.S. government. But facts are facts, and so it's happening.
One of the positions that I tried to take to benefit from that thesis was Gazprom prior to the signing of some of those big agreements, trade agreements with China. And it seemed as if what investors were concerned about was the magnitude of the sizes of the agreements, assuming that Gazprom wasn't going to be doing as much business with Europe as they were with China in the future. Unfortunately, that position didn't do as well. The valuations in the company were attractive, but that was one of the experiences that I had trying to dabble into this thesis, but it didn't kind of work the way, or maybe I'm a little too impatient, actually.
Well, I don't know I don't know the details. So you said it didn't work. I don't know why, because I don't know the details. But Boss Agro, this company I'm a director of, the stock's making all-time highs, sales going through the roof, earnings going through the roof. So it can work. Doesn't mean it's going to work in the future for Boss Agro, but it has worked so far. So there are examples where it works.
And they are some of is there fertilizer being exported to China, or the fertilizer is helping grow foods that are being exported to China? Do you have any idea?
China actually produces fertilizer itself as well. But given the growth of China, they're not exporting or not producing as much as they used to. Remember, China's growing all the time.
Right.
They need, even if they produce eggs themselves, that means, and eat the eggs themselves, that means there are fewer eggs on the world market, so the other egg producers do better.
Right. So, Jim, yeah, let's try to wrap this up in a bit, but I wanted to ask you two things that I've never really heard you discuss about that much, but one is TPP. What are your thoughts on the Trans-Pacific Partnership?
Well, I don't really know enough about it. Part of it because it's been secret, as you know, which is a little bit absurd for people who are citizens of the land of the free.
Right.
That our government won't tell us what's going on. But the basic answer is freer trade, open trade is better for the world. It's always better for the world when you open markets.
Are you concerned when politicians and bureaucrats are the ones that are constructing the free trade agreements? Because that's one of been your criticisms about central banks.
I'm concerned when politicians do anything. They're competent politicians ever in history. Right. But I'd rather them open it up badly than not open it at all, or to close it.
Right. And there's this idea that I've been thinking about, and I've read this recently. It's a book called the Fourth Economy, and the idea is basically in the 1700s we were in a land-based economy. In the 20th century we're obviously in the Industrial Revolution and a capital-based economy, and in the 21st century we're in a knowledge-based economy. This is all self-explanatory, but in a knowledge-based economy, and you always talk about one having to educate themselves a lot, like what, in terms of capital markets and you're investing in large companies, is there, and you're using capital to do so, is there some kind of disconnect that's happening because we're living in a knowledge-based economy? Then, why are we still using, investing in companies and using capital to do so?
Even in a knowledge-based economy, somebody's got to turn on the lights.
Right.
Somebody's got to turn on the telephone, even if it's an iPhone.
Right.
So you need capital, and you need to pay people to come to work. So capital is necessary no matter what. There's different kinds of capital, but in service industries, cash money is capital. It may not be a machine, a big machine or tractor or something, but it's you do have some capital equipment, kinds of necessities.
It sounds like you yourself is also like evolving as well, right? I heard that you've actually explored on how to actually drive a tractor, and like is your like investment criteria evolving as well? And are you looking into different kind of things than what you've been doing over, say, the last several years?
Well, I hope that I'm smart enough to always change when the world changes.
Mm-hmm.
The world changes, I hope I change with it, and the world is always changing. No matter what you think is true today is not going to be true in 15 years. And that has been true throughout history. If you go to pick a year, 1910.
Right.
See what people thought in 1910. 15 years later, the world was totally different.
Right.
1950. 15 years later, the world was totally different. So the world is constantly changing. I hope I can change with it.
So, Jim, give me an idea on your daily routine, because when I watch you in some interviews, we see you often on the treadmill quite a bit. What is your daily routine like for a typical day of Jim Rogers?
Well, if I'm in town, I take my children to school on a bicycle,
Hmm.
and I go to the gym and I work out 2 or 3 hours. Then it depends on what else is happening. I do pick my children up if I'm in town.
Hmm.
I will probably look at the markets and go to my computer or to see what's happening. Sometimes I have meetings. I try to have as few meetings as possible because they're usually not terribly productive.
Right.
And I spend as much time as I can with my children.
Well, thank you. Okay, well, that's great, Jim. I don't know if you have any final words for anyone that's listening in.
Just be very careful because the world's going to have some difficult times in the next couple of years.
Thank